If you're a director of a UK limited company, you're probably watching this video because either your company is about to enter liquidation and you believe you may have an overdrawn outstanding director's loan account and you want to know more about how to deal with that repayment with the liquidator, or your company is already in liquidation and you've had a surprise letter from the liquidator demanding that you repay your overdrawn director's loan account, which has either come as a complete surprise or the amount is a lot higher than you originally expected it to be. If you're not quite sure what a DLA is or how yours has come about in relation perhaps to an unlawful dividend, go back and watch my other video, Director Drawings Explained, and then pop back. The first thing you need to do is establish how much is your DLA. Do you agree with how much the liquidator says you owe, or do you dispute it? So where do the liquidators get their figure from? The liquidator's starting point will be the figures in the last set of filed accounts. We'll then review the bank account transactions and check for any further withdrawals or credits made by the directors since that date, right up to the date of liquidation. We'll also have a look at any other information we've got in relation to the company's accounts. So perhaps there might be management accounts, nominal ledgers, information kept on digital accounting systems, Xero, QuickBooks, for example. We'll have a look at all of that and collate everything together until we arrive at what we think is a final figure. One key person that might be able to help you with any queries in relation to your DLA and the figures would be the company's accountant. But do bear in mind that the liquidator is probably already in correspondence with them and they may have even helped the liquidator arrive at that final figure. But it's definitely worth you picking up the phone and then having a chat with them to see whether or not they can help you understand how the figures have been arrived at and whether or not they do agree with the figures or whether perhaps there's something that can be done to challenge some or all of them. Let's assume you've now got to the position where you actually agree a certain figure is actually repayable with the liquidator. So now you need to negotiate repayment. I suppose before I start, I should say, please don't take it out on the liquidator. We are just doing our job, and that includes doing our statutory investigation to see whether there's any monies that you owe the company. But if there are any, so for example, an overdrawn director's loan account, we've got a duty to realise assets. That's one of our key duties, and therefore we're just doing our job in calling in your DLA. Also, being aggressive or combative with the liquidator, it's not going to get you anywhere because you now need to negotiate with them. So you need to try to keep it professional and remain courteous. Hopefully, the DLA shouldn't have come out of the woodwork as a complete surprise. Usually, if it was something that was already overdrawn in previous accounts, the director should have had some kind of inkling that they owed their company money. Although, having said that, I literally just spoke to somebody yesterday who had been building up a director's loan account for 8 years and hadn't realised it. The accountants hadn't explained it to him and he hadn't asked. He just merrily signed away those accounts without appreciating the significance of the overdrawn director's loan account figure was getting bigger and bigger. And then when he actually came to liquidate, the liquidator got him to sign a document called a statement of affairs, and that declares the company's assets. And in this case, it included the overdrawn director's loan account. But sadly, the liquidator didn't have a discussion with the director as to what that meant. And then the company went into liquidation, and the poor director received a demand from the liquidator for over £130,000. You can imagine what a shock that must have been. From the liquidator's perspective, with all of our cases, ideally we just want to get in and get out as quickly as possible to get the case shut. So when it comes to these overdrawn director's loan accounts, ideally we just want to do a negotiation. Perfect world, we would like a lump sum payment from the director so that we can get the money in and get the case closed. Obviously, that's not always possible, but that would be a perfect world scenario. And that means there is some wriggle room for you to negotiate with the liquidator depending on affordability. So the starting point there will be, what is your affordability? What is your financial position? Do you own your own home? Or perhaps you rent a property, you don't actually have any assets of any particular material value, or you have some but not enough to pay this loan back. Perhaps you earn an income but you don't own any assets, but you could pay some money back in contributions if the liquidator allows you to do that over a period of time. Perhaps you've got other liabilities. This isn't the only debt, but this is now going to be the straw that breaks the camel's back. And perhaps now you're going to be looking at a personal insolvency situation due to this DLA being called in. So we're going to weigh up, what is your financial status? Are you personally insolvent or are you sat on property with significant equity in it? And how much is it going to cost to pursue your director's loan account if for whatever reason you don't negotiate or you don't communicate, you don't come to the table, you just bury your head in the sand and hope it goes away? Well, one of the things that we can and potentially may have to do is force you into bankruptcy. And that would mean that an insolvency practitioner will be appointed to act as what's called your trustee in bankruptcy, and their job is to realise your assets. So, in extreme situations, you could be forced into bankruptcy by your liquidator, and then your trustee in bankruptcy could commence recovery proceedings against you to realise your assets in the bankruptcy estate. And that could result in your home being repossessed. So, ordinarily, despite the fact that you're not personally liable for a company's debts, so it's liquidated, you're usually protected by the corporate veil. If you owe the company money personally, actually your house is at risk. But obviously, this is a worst case scenario, and it's something that we want to avoid, and no doubt you want to avoid as well. So if you do owe some money to the liquidated company, we're going to look at how much is it going to cost to make you bankrupt? How long is it going to take for us to get a dividend back, perhaps in that bankruptcy? On average, if there's a property to repossess, that might be a couple of years. And so it may actually be better for us to negotiate a repayment plan with you to write off some of that debt and allow you perhaps to pay some monies back in installments. It's a bit of a win-win for both parties. I've given advice to a spate of directors recently, all of who had over £500,000 worth of equity in their homes and owed director loan accounts. And what they wanted to negotiate was almost laughable, considering the fact that they're sat on that amount of money, or equity, sorry, and they just want the debt to go away. In which case, you really do need to come up with a repayment plan, ideally a cash lump sum, but that's not always the case, that will satisfy the liquidator. And the liquidator, we need to be able to satisfy our auditors, our licensing body, and the creditors to justify if we do write off any of those director loan accounts. Consider whether, if you're given time, you can repay some or all of your DLA over the space of perhaps a year or two. I did want to have directors that wanted to repay their DLA back over 10 years, and they were sat on a significant amount of equity in their property. So, that's not something that I could consider. But if it's a reasonable proposal, then we will look at it and take it seriously. Consider whether or not you've perhaps got any family or friends that might be willing to loan you a lump sum just to do a deal, get rid of the liquidator, and then you kind of swap us for a more friendly creditor that perhaps you can pay back over a longer period of time. So if you do owe a DLA and you're able to repay some or all of it, there is some wriggle room there for negotiation. In the perfect world, if you can afford it, please do use a solicitor to negotiate with the liquidator or the liquidator's solicitors for you, and ensure that that solicitor specialises in insolvency and is experienced. The liquidator will then also take those negotiations more seriously. If you found yourself in this predicament, feel free to get in touch with me and I'll give you my opinion on your position and what I think might be a fair deal to try to negotiate with your liquidator.